Hey everyone, welcome to another video by Optionables. My name is Saket, and in today's video we are going to look at what happened to the markets, what we can expect from the markets tomorrow, and what happened to our trades. So first, if we actually look at it, yesterday European markets and US markets, all of them ended lower. So European markets closed around 2.5% lower, and even US markets almost ended around 4% lower. Looking at this, it was quite obvious that even Asia is going to open lower. As expected itself, so Nikkei, Hang Seng, everything ended up opening around 1.5–2% lower. And even SGX Nifty was suggesting around 80–100 points gap down. But for our surprise, market actually didn't gap down at all. So pre-opening was a gap down of around 50 points, but immediately we saw market trade in positive. So even this came as a big surprise to me because every other market was trading so lower and only Indian markets actually were in positive. So the markets opened somewhere around 16,300 and it consolidated there almost till the afternoon session. So slowly and gradually we started seeing some more buying come in, and from 16,300 it started moving towards 16,350 and also it went almost close to 16,400. So if you remember, even yesterday market had made a high of 16,400 and even today it came towards 16,400, and after that towards the end, I think the FIS came back and started selling the stocks very aggressively, and just in matter of 30 minutes from 3 o'clock to 3:30, so even if you actually take a much broader picture, maybe from 2:45 to 3:30, the markets fell close to 1% or 150 points. So there was heavy selling, especially during the last 45 minutes of the trade. So the most obvious reason what we can relate is the FIS selling. Most of the stocks which did well in the morning saw some profit booking, and the stocks which was already beaten down in the morning saw further selling. So if we actually look at it, especially the metal sectors saw the biggest losses. Hindalco, Tata Steel, everything ended up falling somewhere around 3.5 to 5%, in the range of 3.5 to 5%. So not just that, even Reliance was quite down. But only thing which actually supported today was the banking sector, because both ICICI Bank and Kotak Bank ended up doing well. Apart from that, if you see the stock specific news, HUL and Britannia, so they were planning to increase the prices of their products by 20%. So this is a big positive news for HUL, and even that ended up rallying close to 3%. Adani group of shares were beaten down very badly. So most of the Adani shares fell anywhere between 5 to 7%. So now, looking at the overall market and today's price action, it is quite obvious that the sentiment is pretty bearish, because today also you saw that markets actually opened higher, went up even higher, but it was not able to sustain. It closed almost at the day's low, lowest point of the day. So at the lowest point of the day, it also broke 16,200, which is right now acting as a pretty good support. Even that was taken out, and the last traded price just came in and around 16,200. But because of the 30-minute average, the closing happened around 16,250. Looking at this, the sentiments are clearly bearish. That means what is the range we are expecting from the market? So if you actually look at the open interest data and the chart data, based on our analysis, we hold by the yesterday's range itself, that is 16,000 to 16,600. But here we have made a further change on the upper side. So if you remember, on Monday, we suggested a range of 16,000 to 16,800. So yesterday it was 16,000 to 16,600. So today we feel that the market can trade in the range of 16,000 to 16,500. So our upper side is slowly moving down, and we had a short strangle in Nifty of 16,000 and 16,800. Yesterday we had removed 16,800 call legs and shifted to 16,600 call legs. Today we closed our 16,600 call legs and shifted it to 16,500 call legs. So that is for the Nifty's range. And coming to Bank Nifty range, again we still hold by the same range what we had, that is 33,000 to 35,500. So initially we started off with a range of 33,000 to 36,000. Yesterday we changed our call leg from 36,000 to 35,500, and right now we are still holding the same short strangle of 33,000 to 35,500. 500. So these two are the positional trades which we are continuing to hold, and we didn't take any intraday trade. So as I had told yesterday itself, the market is very volatile, and in such markets it is very hard to trade because the market is moving up down, triggering the stop losses everywhere. So that's the reason we thought it is far easier to do OTM strangles, maybe hedge it and just leave it rather than do intraday, because the stop losses are getting hit every single side. We are still holding on to the short strangles what we had, and that has decayed quite a lot. So we have almost realized close to 50 to 60% of the total realizable profit. So based on how the market moves tomorrow, maybe we will close the entire position. Once when we get around 70 to 75% of the total profits, then there is no point in holding an option sell position, because the risk to reward from that point will no longer be attractive. So it will be attractive only when the premiums are at its fullest. So as the premium starts to shrink, when you have already collected 75% of the premium, it will no longer stay attractive. So not just that, if you actually look at the crypto market, I just opened today and I was in for a surprise, because Bitcoin has almost crashed to around $30,000. So last time I saw it was trading around $44,000, and today I open it's around $30,000. So Sujit actively trades in cryptocurrency via Delta Exchange, and you can also check that out in the description. You can also check out crypto trading videos. We have a separate playlist where Sujit has explained some of the system-based trade, and you can also definitely check that out. And now if you look at the rupee, again today rupee ended up depreciating. It's somewhere around 77.33. So it is the lowest point for the rupee, and looking at the trend, it is quite obvious that FIIs are pulling out money. So once the money starts to leave the country, that time the rupee will end up depreciating. So that is one thing. And second thing is, when the inflation is very high in the country, that time also the rupee will start to depreciate. And right now we are almost at the lowest point against the dollar. So coming to today's trade, as I already told, it was mainly positional rather than intraday. We ended up making an overall gain of around 3.3 lakh. So now we'll be quickly moving on to the screen recording. Since I haven't done any intraday trade, so there is no logic to explain for the intraday trades. Most of the profits have come from positional trade alone. So I will just be opening the chart and explaining the logic as to why exactly we took these positional trades. And meanwhile, if you have liked this video, share this video and subscribe to Optionables, and do let us know in the comment section how your trade went and what is your expectation from the market for tomorrow and day after. Thank you so much for joining, guys. Hey everyone, welcome to the video. In this video, we are going to discuss about the positional trade which we have taken. So the thing is, as I had told you in the earlier video, that we reduced doing intraday trades because it was very volatile and our stop loss was triggering everywhere. And that's the reason we shifted to positional trading. So while we shifted to positional trading, the first trade which we took was OTM short strangle in Nifty. So that was 16,000 put option short and 16,800 call option short. So this was the trade which we actually took on Friday, and we also suggested this trade in the video. So a short strangle at 16,000 and 16,800. So I'm going to discuss the logic as to why exactly we took this trade. So on Thursday, if you actually look at the market, there was a huge red candle, and this decisively closed below 16,800, signaling bearishness. And 16,800 was a very strong support for the market previously, and we have also discussed multiple times. So we can right over see here, market has taken good support at 16,800, not just once but multiple times. But here the market had broken 16,800, and on futures the volume was extremely high. And the very next day, market opened above 16,800. It also went towards 16,900, but it was unable to sustain. Immediately there was a sell off, and the market ended up coming closer towards 16,600. So by this time, it was pretty clear because there was a lot of uncertainty in the globe also, Russia-Ukraine war, and there was a Nasdaq sell-off which was happening. And that's the reason we sort of thought, based on the price action, markets might not cross 16,800 before this expiry. Now, on the downside, the thing is, we particularly expected the market to fall a little, and we had gone short on futures also. But we were still expecting market to hold 16,000 on the downside. So when I actually put the weekly chart, you can see right over here, market had previously faced a lot of resistance at 16,000. So the market had not broken 16,000 at all. And finally, after long months of consolidation, market ended up going above 16,000. And from 16,000, it went on all the way to 18,000. And again, even recently, during the Russia-Ukraine war, when we saw a huge crash in the market, it took support around 16,000 and later bounced back. So that's the reason we knew that 16,000 is going to act as a very strong support for the market. Based on this, it was pretty straightforward for us to decide our levels, and that was 16,000 to 16,800. We now also looked at the open interest. So I have put 6th of May. So you can see 6th of May is a Friday. So here you can see there is a very strong put writing at 16,000 and a very strong call writing at 16,700 itself, but we tried to play safe by going at 16,800. This is the same thing which I had suggested on the video which we put on Friday also. So a range between 16,000 to 16,800. So now what happened is, if you remember, yesterday we suggested shifting from 16,800 to 16,700 and 600, and today we suggested that we have shifted the call leg from 16,600 all the way to 16,500. So I am going to explain what is the logic. So initially this was the range 16,000 to 16,800. Later we shifted from 16,800 towards 16,600, and now we have shifted towards 16,500. So what is the logic and why exactly have we changed our range? So this is something which I'm going to explain now. When we look at the price action on Monday, so this is Monday, so what we get to see is that there was a huge gap down, and immediately there was some buying which happened and the market ended up heading higher. But we also saw that this move of market towards 16,400 didn't sustain, and immediately the market was beaten down. So this action made it quite clear that at lower levels market is finding support, and at higher levels, as soon as the market tries to move high, there is immediate selling which is coming. So now how do we confirm our view? So we can look at the open interest. So you can see as of May 6th, there are totally 77 million calls, and the highest call rating is at 16,700. But when we come to Monday, you can see that at 16,700, call rating has reduced, and the highest call has moved towards 16,500. Now there are 88 million calls, but there is a huge call rating which has happened at 16,500, much more than what 16,800 or 700 had. So the thing is, once people are writing so much calls at 16,500 itself, then obviously we'll be much safer towards 16,600 or 16,700. And this is the reason why we decided to shift all the way from 16,800 to 16,600 and 700. There were mainly two reasons to this, and the first reason is what we discussed on the chart. Whenever the market came towards 16,400, there was immediate huge selling which took place and the market came down. And to support our view that there is resistance on the higher side, we did see a lot of call writing which was initially at 16,700, 800 and 17,000 shift towards 16,500. This clearly means that call writers are now not expecting the market to cross 16,500. Now let's go to today's move and see what exactly happened. So when you actually look at the today's move, again the market opened more or less flat, went all the way high, and then there was immediate sell-off which took the market and made it close at the lowest point of the day. So this is a very negative trend. On chart, there is a lot of bearishness. And now when you look at the open interest as of today, you can see that there is significant call writing even at 16,400, because on 9th of May, there was 3 million at 16,400 and 5 million at 16,500. But today, 16,400 itself has around 5 million contracts and 16,500 has around 6.3 million contracts which are sold. So this gave us much more conviction, because on charts it is very bearish, and whenever it is going towards 16,400 itself, people are selling. So the trend looks very bearish on charts. And on open interest front, you see that there are a lot of calls written and there is some significant call writing at 16,300, 16,400 and 500. So this gave us much more conviction to shift all the way from 16,600 towards 16,500. So this is the reason why we have made our shift closer and closer. And now the advantage is, even if the market moves slightly down, we have comfortable cushion from the call side. So if there's a 100 point or say around 150 point gap down, we will be further shifting our legs. So once we see that the trend is obviously bearish, once we see good amount of call writing at 16,200 and 300, we will shift our legs from 16,500 towards 16,400. Let's say tomorrow there is a huge gap down and we feel uncomfortable holding the position. By now we have already got a lot of theta decay and we are at a very good profit, because we had gone 2,000 quantity each and we are already at a pretty good profits. Now let's say market opens around 16,150 tomorrow and I see that market is taking no support. So that time I rather as well close the entire position. The moment we have realized close to around 70 to 75% of the profits, that is more than enough to book our position. So now you might ask, what if there's a 200 point gap down? So even that is going to be fine. Why? Because we have got this PE at a very high rate. So right now this is at 48, but we have sold this somewhere around 94 or 95. So even if the market tomorrow the premium tomorrow doubles towards 90, so we can still exit this at break even, and on the call leg we would have made fantastic profit from 16,800, 700, 600, 500. So all these call legs ended up giving us very good profits. So that was the idea as to why exactly we took. Initially we entered this trade. The idea was pretty simple, because we were expecting a good support at 16,000 and also a good resistance at 16,800. And as you saw, we started to shift our legs closer and closer, because we felt that upside was limited based on open interest data and the chart data. And this was our logic for entering the trade. And I also hope that this particular thing was useful for you guys. And if you have liked the video, then do not forget to hit the like button, share this video and subscribe to Optionables. And even if there is a huge fall tomorrow, that still won't bother us, because we have around 800 quantity Nifty future short. We would actually want Nifty to go down. And the thing is, we won't be closing these future trades unless and until Nifty ends up crossing 16,800. So we ended up cutting 200 quantity of our futures, because at 16,200 that was our initial idea, to cut around 200 quantity. So below 16,000 we'll cut further 200 to 300 quantity, and around 15,500, if it reaches first, we will end up cutting all the futures. So this is the plan what we have. In case if the market ends up bouncing towards 16,800, then there as well we might end up cutting all the futures. So with this, we also come to the end of this video. If you have liked this, do not forget to hit the like button, share this video and subscribe to Optionables. Thank you so much for joining.